Hey everybody, Jerome Maldonado. I want to talk to you guys about the benefits of owning real estate as it relates to your taxes. And so one thing that I always tell people is owning one piece of real estate is exactly the same as being an entrepreneur. And what's great about entrepreneurship and being a business owner is this right here. The difference between an entrepreneur who owns a company and somebody who's working for a W-2 and working a job is the fact that when you work a job, you go out, you work, and then you get taxed on your 941s, and then whatever's left after you get taxed, you get paid. Then from that money that you make after you get paid, you can spend, okay? Business owners, this is what's great about business ownership, is that you get paid your gross amount of money, you pay all your bills, you spend, and then whatever's left at the end of you spending, then you pay taxes on what's left. And here's why I like that best, because let's say for sake of example, you implement some of the simple steps about buying land, building a house, going out and investing in commercial real estate, and how to redevelop or develop new real estate, and you make a profit. You go out, you make a few $100,000 a year. If you go out and make $300,000 a year, you're gonna land up after taxes, depending on the state that you're living in, having someplace in the neighborhood of about $180,000 to $200,000 in your pocket. Over $100,000 of that income is gonna go to the IRS. Difference between a business owner is you can go out, you can make $1 million, spend on the car that you're gonna write off, your house that you're writing off your home office, and all your expenses, the fuel, everything that you do associated with business meeting, lunches, dinners, travel, everything, you write all that off. You make $1 million, you spend $750,000, and you still have $250,000 left over, then you pay your taxes. Now, difference is you're not paying your mortgage with that $250,000. You're not paying your car payment with that $250,000. That's what's left over. And so everything that you're able to take now and you have left over, you can redeploy and invest into other business investments and real estate. And so what I love about real estate as it relates to taxes is the fact that you can go out and you can buy a piece of real estate, open up a single entity, LLC, where you have a company. You put that house, that building, that apartment complex, that piece of land that you bought to build a house, and you house it under an LLC. And now, any income that comes in to that property, before you go in and you pay taxes on any of that, every time you drive out to a construction site just like this, every time you have lunch with a client, just like when you're doing business and you're talking real estate, your electricians, your plumbers, your foundation guys, anybody, tax write-off. If you have to travel to go to a conference, relates anything at all to your business as it relates to real estate or anything, tax write-off. And so every time I travel, we're going to a summer camp with my son where he's gonna spend a week in Florida throwing footballs. And so what I did is I scheduled a business meeting every single morning, early in the morning, right after I drop him off at 8 o'clock. That way, every single day, I have a tax write-off because I'm there doing business as it relates to real estate. And you can do that with just one piece of real estate. If you're shopping to buy more, you're ambitious and looking to being able to learn the game or whatever you're doing, and it's a business write-off. And so what I love most about real estate is it's a business, just like the McDonald's down the street, just like the gas station down the street, just like the pizza parlor down the street, just like the accounting firm, the insurance office, the doctor's office, it's all a business. And so ladies and gentlemen, the reason I encourage people to go out, not only to make a profit in real estate, buy a piece of land, buy an investment property, and house your money in real estate, is because you can depreciate that asset, you can take advantage of the tax benefits, you can also go in and have all the tax write-off that any traditional business owner has, and you can profit from it. Ladies and gentlemen, there are multiple ways to generate revenue in real estate, from a cash-on-cash return, passive income, through rental properties, being able to go out and sell the property and get an internal rate of return that you profit on your real estate. And what most people miss, and one of the largest profitabilities in real estate, is through your means of deducting taxes. So ladies and gentlemen, before I end, I want to tell you this quick story. 2 years ago, I had a huge tax bill. I landed up helping a buddy buy a house from him because he was under foreclosure. He was under tax distress from the IRS. And so I went in there and I purchased the house at an inflated value. And so I did a lease back on the house, and all the money I collected in rent, minus what I paid in interest, I paid taxes on. But when I sold the house, he was in a different position and he no longer owed money to the IRS and he had cash. Well, he said, Jerome, can I buy the house back from you? And I said, yes. And he goes, can I just buy out the loan? And the loan was a few $100,000 less than what he had purchased the property for originally. And so I took that $300,000 or $400,000 difference and I wrote the entire amount off in 1 year in my taxes. So not only do we depreciate the asset, but we took the depreciated value of that sale and I was able to write the entire thing off on my taxes. So if you're ever in a position where you're taking a small loss on real estate, just like you do in the stock market, because you have gains on other properties, sometimes I'll take a loss on purpose just to offset my taxes because the profit that I have from not paying my taxes is greater than the loss that I'm taking on that asset sometimes. And so there's a lot of tricks to the game. There's a lot of loopholes through the tax system. But ladies and gentlemen, you don't go out and you don't screw the IRS. You just learn how to beat the game and be able to implement it. They make the rules, you just follow them. There's a ton of loopholes. Real estate and business is the best means to offset your taxable income. Ladies and gentlemen, learn the game, understand taxes. You like this content, you want more information just like this, pound and subscribe, click that thumbs up button. I look forward to seeing you next time.